Obviously, all of this has occurred during a global pandemic that has led to a recession, but is seeing stock prices explode. And we just live in this like really weird, complex, kind of uncertain time. How have you seen COVID-19 and all of the kind of impact of that affect fundraising for companies or even companies wanting to go and use the platform?
First, I want to share that even fundraising during the pandemic, I'm sure, is not as challenging as planning for a wedding during a pandemic. And so on that note, just want to say congratulations again. The past 6 months have been obviously a surreal time for all of us. I do think that companies looking to raise from raising venture capital or traditional institutional capital have been going through a hard time, meaning the public stock market has been performing better than anyone had expected, perhaps irrationally so. But that doesn't mean that institutional investors looking at private capital haven't slowed down a lot. And you may be a far more experienced person than I am to share a view on it. But from my lens, I think a function of that is, given the volatility in the public market, a lot of family offices and institutional investors are delaying and are much more cautious about investing and providing more exposure to the private market, right? So the process, at the very least, has been dragged out longer for founders and projects looking to raise traditional venture capital or institutional capital. On the other side, though, retail capital has been doing very well. Like April was our best month yet, then May was much better than April, then June was like a banner month for us. And it's the same for other players in the market. It's not a story that's unique to Republic. There's one clear solution, there's one clear answer. One is that people have a lot more time now. So the value of like private investing and quite frankly of blockchain as a technology in general, most people up until now have too little attention span, like 9 seconds online. Like by the time you finish saying equity crowdfunding or, SAF, simple agreement for future tokens, people lost interest. Now they're stuck at home. So they're like, between webinars and podcasts and newsletter and all of these things that they have more attention to follow. And I think the value proposition of private investing is just obvious. There's one interesting stat, I think it's from the Boston Consulting Group, that in the year 2030, 10 years from now, 75% of Fortune 500 companies in the year 2030 have yet to exist today. So you're talking about a huge swath of technologies and household brands that will change how we work and live. And yet in someone's garage or in someone's head today, the notion that you can put $10, $20, a pitcher of beer worth in some or more of these potential ideas and play a role in it, I think it's naturally compelling. I don't think that anyone should be expecting to get rich out of private investing because they hear it in the news. It's just a wrong way of looking at it. But it's a really compelling thing to say that you got to be a bit more of a direct participant in entrepreneurship, given that it's changing how we are as a civilization. So I think that the message finally is getting through, and because of that, retail capital has, and I predict will continue to do very well, probably at one time larger than institutional capital.
Yeah, it's crazy to see the impact and how institutions kind of froze up and retail invested a bunch. And in the public markets, obviously, that was very beneficial for retail investors because stocks exploded kind of with all the Fed's reaction. In the private market, it's a little less obvious, right, in terms of our companies doing better or worse, just because there's not kind of that daily stock price to associate it with. Help me understand, like go ahead.
Let me add on another point there is that after the last great recession of 2008, that's when you started to see, I think Airbnb launched in 2009, WhatsApp, Stripe, Square, like major companies, corporations now launched right after following the recession. So that's the value of private investing, is that it's not as affected by near-term psychology and volatility, and only time will tell. And I do think that you're going to see a similar batch of household brands coming out of today's pandemic.
Yeah. Help me understand where we're going, right? Digital securities, you guys have obviously helped pioneer this. You're able to show that there is a community of investors. You're able to show that there is a community of entrepreneurs that want to use this as a way to get funding for their businesses and kind of continue to build. How does this evolve over time, and where do you see this going kind of over the next 5 to 10 years? And then what are the obstacles in the way from where we are today to kind of that milestone?
Two answers for that, and that's a hard question because forward looking, and I was wrong about how quickly SDO would be adopted back in 2017, but I'm very optimistic that you're gonna see that in the next 12 at the latest 24 months, and seeing what if that's the question. I think the easiest way of looking at or the signal of maturation in this space is when you have like the Spider-Man, the X-Men movie franchise, or something comparable in sports, with clearly many millions of fans around the world. And when they're looking to finance the movie or the athlete, and make it through, the only way to do that still and will be in the near future is through this blockchain technology. Make it possible so that a student in India can invest $5, $2 into this movie to be produced because she loves the prequel, and there's a non-fungible token on her phone that shows that hey, she's an investor in this new Superman movie, and that if she goes back to her school and can sell it to her classmate very quickly for 10% more, and the token would come with it, and that's a new mark of being an engaged citizen. That's like the equivalent of like wearing a Chanel bag. Like, what do you get in on, and what do you own? Just a little sliver of it. That happening at scale, I very much hope to see that in 12 months, no later than like 18, 24 months. Now, once that's doable, and once you see something like that happening, the other iterations of tokenization naturally will come. It's very hard to predict the full scale of it because I believe that this technology will fundamentally change private investing or private asset classes as we know of it. First is people getting in at the primary level, and then the secondary market will develop. That will naturally unlock the gold bars that people have in Africa and Latin America, in Asia, that up until now they hide in the debate. That's the only way, that's the best way to save, because they don't believe in the national currency and they don't believe in the banking system. Once you unlock all of that, I do see a vastly more prosperous world, and that perhaps I don't know, we may not see another recession again. That will really throw traditional economics, completely off its rail. The challenge is and will be how fast and how aggressive regulatory framework can adapt or hinder this process. DeFi is a very good example. So you see, something like over $2 or $3 billion worth of assets now locked in various DeFi instruments, still largely unregulated. And so people take these various positions on whether or not it's even regulatable, given that it's a direct transaction between two parties. That said, you have yield in double digits. I think some instrument yield over 100%, annually. There's bound to be, fraud and harms and all of these things. So the SEC and FINRA and their equivalents in various countries, I think will come in and will operate, will collaborate, and will hinder. And how that conversation or these conversations will take place in each country, I think basically is the one single factor that will enable one to predict more accurately how fast or how slow this industry will mature.